In this video we are going to talk about 15 dividend stocks to buy in 2022. So before starting this video, please like this video and subscribe to this channel for our future updates. Number 15. ExxonMobil Corp, ticker, XOM. The big oil companies have had a rough 7 years. Since the 2014 oil price crash, most energy companies have had to reduce compensation to stay viable. Except for ExxonMobil. Despite a reduction in income, management kept its large salary. ExxonMobil kept investing heavily in new oil, gas, and refining projects. Exxon's offshore Guyana oil field is a key new energy asset for the industry. As a result of investing throughout the business cycle, ExxonMobil is well positioned to gain from recent oil price increases. However, ExxonMobil's income appeal remains strong. The dividend is guaranteed even if oil prices fall below zero in 2020, and the stock yields 5.7%. Number 14. Enbridge Inc, ENB. The energy sector pays dividends to more than just oil and gas companies. Midstream corporations handle crude oil, natural gas, and refined commodities storage, transportation, and distribution. Enbridge is a blue-chip stock in Canada and the fourth largest holding in the MSCI Canada ETF, EWC. Decades of dividend payments have made Enbridge one of North America's largest pipeline companies. The company's payout has climbed considerably in recent years, notwithstanding the recent COVID-19 collapse. Prices of oil and gas fluctuate, but pipelines do not. Enbridge gives a 7.2% dividend yield. Number 13. Toyota Motor Corp, TM. In recent years, most auto stock traders have focused on electric vehicle (EV) businesses. That's understandable. The developing electric vehicle space has seen a lot of activity and new product debuts. Traditional automakers, on the other hand, should not be overlooked. These companies already have massive customer bases, dealer relationships, and worldwide supply chain and logistics footprints. Without a doubt, Toyota will be a major role in the future generation of vehicles. Meanwhile, Toyota is already a very lucrative company that trades at only 10 times earnings. The stock also pays a respectable 2.5% yield. Number 12. Intel Corp, INTC. No one thinks of technology companies as dividend payers. Exceptions exist, especially with more developed tech firms. Intel's big and reliable semiconductor business for personal computers and data centers is a cash cow. One of these, Mobileye, is a significant catalyst for 2022. Intel will spin out the company as a public company, but will retain a majority interest. Analysts estimate Mobileye's standalone value at $50 billion or more, a substantial return on Intel's $15.3 billion purchase price 4 years ago. Intel's capital expenditures will be reduced, releasing funds to reinvest in the core business or return to shareholders. Today Intel pays a 2.7% yield. Number 11. Lockheed Martin Corp, LMT. The military sector had a bad year in 2021. Investors sold off the sector as a result of the Biden administration's decision to leave Afghanistan. Despite this, Lockheed Martin continues to win new contracts from the US government and international governments, cementing its position as one of the top dividend stocks to buy in 2022. Because institutions are avoiding military contractors, ordinary investors have a lower entry point. Lockheed Martin pays a 3.2% dividend yield and trades for under 13 times forecast profits. Number 10. Raytheon Technologies Corp, RTX. A large defense contractor is Raytheon. Raytheon was created by combining United Technologies and Raytheon in its current form. Several enterprises, including elevators and air conditioning, were spun off from that corporation. Raytheon became a specialist in aerospace, drones, satellites, and cybersecurity as a result of this. Raytheon's stock price has fallen much behind that of the S&P 500 as a whole, owing to the defense industry slump. Raytheon isn't just a defense contractor, it's also involved in commercial aviation and space. The stock is currently priced at 17 times expected earnings, with analysts projecting double-digit earnings growth in the future. RTX also has a 2.4% dividend yield. Number 9. JP Morgan Chase & Company, JPM. On the list of greatest dividend stocks for 2022, it might be too late. After all, JP Morgan stock has risen over 25% in 2021 and is reaching a record high. Over the same period, the largest US bank's main business has risen substantially. Banks like JP Morgan are thriving thanks to a burgeoning property market, rising stock market activity, and lower interest rates. Both the retail and investment banks are performing well. The bank still trades at just 10 times current year earnings. JP Morgan's allure is heightened by its legendary CEO Jamie Dimon. The stock also pays a 2.5% dividend. Number 8. New York Community Bancorp Inc. NYCB. New York Community Bancorp is a safe higher-yielding bank. It is a New York City-based regional bank that specializes in multifamily loans. The bank creates low loan-to-value loans to minimize losses even during economic downturns. During the 2008 to 2009 financial crisis, New York Community Bancorp remained profitable and paid its dividend. In 2021, New York City's pandemic-induced recession lifted the bank's shares. An impending merger with Flagstar Bancorp Inc., FBC, has pushed the stock from $14 to $12.50. With a 5.6% dividend yield, it's a superior entry point for income investors. Number 7. Westpac Banking Corp., WBK. Concerning foreign banks, Westpac appears promising. It is a titan of the Australian banking business. Shares fell from $20 to $15 recently. Part of the reason is China's economic slowdown affecting pricing of vital Australian commodities like iron ore. Australia's economy is closely linked to global inflation and growth. Investors have begun to focus less on inflation and more on rising interest rates and a slowing economy. If inflation rises again and commodity prices rise, Westpac and other Australian names should recoup their recent losses. Australian banks are known for paying out big dividends. WBK stock pays a dividend yield of 6.2%. Number 6. Grupo Aval. Colombia's Grupo Aval is another worldwide bank. Toll roads, infrastructure and other concession assets, such as toll roads, are owned by the holding firm. Crude oil accounts for about half of Colombia's exports. As a result, the economy has struggled recently. Colombia has recovered quickly from the epidemic, as oil prices have risen. And the travel and tourism sector has surpassed 2019. Despite this, Aval is still down 30% from pre-pandemic levels, as foreigners haven't noticed Colombia's rebound. Even though the corporation recently reported record quarterly profits. Aval pays a monthly dividend of around 2.5 cents per share, representing a 5.5% dividend yield. Number 5. Realty Income Corp. Aval isn't the only 2022 monthly dividend stock to consider. Also consider Realty Income REIT. Owner of a diverse portfolio of retail and industrial assets. 7-Eleven, Walgreens Boots Alliance Inc., WBA, and FedEx Corp., FDX. When it comes to e-commerce and the pandemic, Realty Income's standalone retail properties have fared well. Earlier this year, it merged with Verite, doubling its property portfolio. Real estate income's company and share price are unlikely to increase quickly in the current retail environment. But it's the most famous monthly dividend firm, and shares yield 4.3% going forward. That's a generous offer in today's low-interest world. Number 4. Bristol Myers Squibb Company, BMY. Pharmaceutical and biotech companies have had a rough year. Unless a company has a COVID-19 vaccine or therapeutic angle, investors haven't been impressed. A decline in the sector's stock prices has started to open up some prospects for 2022. For example, Bristol Myers stock is down 20% since the summer. Due to the drop, shares currently trade at 7 times forward earnings. With such a low valuation, the company may be in peril. But management expects a 1% annual revenue growth through 2025. When growth meets a low price-earnings ratio, positive things happen. Despite many significant mergers, Bristol-Myers Squibb should achieve a constant profit trajectory and a higher valuation. BMY now produces 3.7%. Number 3. 3M Company, MMM. 3M is the ultimate dividend payer. 3M, well known for Post-it notes, has a diverse product portfolio for both consumers and businesses. 3M makes insulation, lubricants, medical supplies, dental tools, and cleaning supplies. 3M is a wonderful way to invest in the American economy because it has so many items. As 3M's revenues and earnings expand decade after decade, its exceptional diversification makes it a solid portfolio choice. As a result, it has increased its dividend for over 50 years running, making it a dividend king. It now yields 3.4%. Number 2. Northwest Natural Gas Company, NWN. Utilities aren't the most glamorous stocks. People don't discuss power companies at cocktail parties. Diverse income sources are often overlooked by dividend investors. Northwest Natural is another dividend king, with a 50-year dividend rise streak. The Portland, Oregon-based natural gas utility has benefited from the recent boom in the Pacific Northwest's economy and population. In 2021, utilities underperformed the market. Concerns about rising interest rates led investors to devalue utility stocks. However, Northwest Natural's stock price is down almost 30% from its pre-pandemic peak, and it pays a 4.1% dividend. That should be enough to persuade some income investors to choose it over a bond or a bank CD. Number 1. South Jersey Industries Inc. SHE. From the west to the east, South Jersey Industries is the greatest dividend stock for 2022. South Jersey principally runs two New Jersey gas utilities. One, as the name implies, covers the state's south. The other is about the NYC suburbs. South Jersey moves slowly. South Jersey's population growth is slow compared to New Jersey's. But most income investors probably don't mind. A PE of less than 15 is a bargain in South Jersey. Until 2022, shares provide a 5% dividend yield. The stock is down around 15% from its 52-week highs, making it a good buy. What do you think of our video? Let me know in the comments section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.